Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Thursday the 11th of April 2019. My name is Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Okay, as ever, let's kick off with a look at the overnight changes and price moves to be aware of. One or two key points to draw your attention to. Firstly, the British pound against the US dollar. The pound gaining by 0.13% to take its weekly moves against the US currency to 0.22%. But surely we should have seen a bigger upside move given the sentiment in the market on the news around Brexit, and we'll come to exactly what that news is a little bit later on in the video. We've also seen a slight downward movement in the Australian dollar overnight, down by 0.08% against its US rival, though the Aussie currency remains well bid over the course of the last 7 days. Again, there's news flow out of Australia, which we'll come to momentarily. Elsewhere on the table, both Canada and Mexico lost ground to the US dollar yesterday. The Canadian dollar giving up 0.15% against its US rival, and the Mexican peso down by 0.12%. But very differing fortunes over the course of the last 7 days. The Mexican peso has been very much on the front foot, the Canadian dollar less so. Elsewhere then, and finally really, as far as commodity and trade related currencies are concerned, the South African rand gave up 0.1% over the last 24 hours. But look where the rand is trading, trading with a 13.92 handle, so well below that key 14 rand to the dollar mark, a psychological area of that, and the rand has gained 1.38% against the US dollar this week. Dollar index for its part slightly down on the day, down by 0.05%, bringing its weekly losses to 0.41%. And again, there was news flow out of the States last night which might cause people to think about valuations around the dollar further. Okay, without further ado then, what's on the calendar? Events that may move the markets today. Okay, well, it's a pretty light calendar as far as high impact data is concerned. We've already had some information out of Australia this morning in the shape of consumer inflation expectations for April, which were lower than the prior reading. And then we had from China a series of CPI and PPI announcements. The CPI month-on-month data are a bit disappointing. PPI data on a year-on-year basis relatively static, and in terms of where it came in versus consensus, but improved against the prior month's reading. To come then this morning at 6 AM GMT or 7 o'clock London time, we'll have harmonised index of consumer prices data out of Germany for the month of March. This, of course, the ECB's preferred measure of inflation across the Eurozone. And then it's a big gap until 12:30 GMT this afternoon, when we'll have producer price index data out of the US for the month of March, though that figure is X food and energy, of course. At the same time, we'll have initial and continuing jobless claims out of the US almost a week after that non-farm payrolls beat that we saw last Friday. And then we're switching over to, or handing over play, shall we say, to the central bankers. At 13:30, Fed member Clarida will be speaking. At 13:40, the Fed's Jimmy Bullard will take to the rostrum. Then at 1700, we switch over the border to Canada for a speech by Bank of Canada's Wilkins, and back into the US proper for a speech at 2000 hours from the Fed's member Bowman. And then again another small pause until 22:30, when we'll cross to New Zealand for business PMI data for the month of March, and that'll be followed 15 minutes later by electronic card retail sales out of the country, again for the month of March. Right, breaking news and comment then that's caught my eye overnight. And first of all, Theresa May has secured a Brexit extension until the 31st of October, but is told not to waste time, or any more time perhaps, by EU leaders. The minutes of the Federal Reserve's March meeting were released last night and suggested that rates could move in either direction during the course of 2019. That was a somewhat different interpretation than the market had taken away from the original March meeting and press conference. So something for the markets to digest and ponder over there. Meanwhile, Australians will head to the polls on the 18th of May as PM Scott Morrison called a general election and dissolved Parliament overnight. And China and the US are said to have moved a step closer towards a trade deal by agreeing on how such a deal would be enforced, which had been a major stumbling block to actually signing an agreement. So perhaps we're one step closer to actually seeing pen put to paper there. Okay, food for thought and something to take away with you into the trading day and beyond. And why not think about this? We're just about to kick off Q1 2019 earnings in the US with JP Morgan reporting tomorrow. And this is where stocks are in touch with all-time highs and at the tail end of a decade-long bull market. I'd say tail end with a question mark there because it may not be the end of the bull market, of course. And that bull market has seen spectacular gains and outperformance from US equities, as the map opposite shows us. And this map, which is courtesy of Bank of America Merrill Lynch, plots the scale of US companies against the market capitalization of European stock markets as a whole. So, for instance, in Germany, Apple and Walt Disney's combined market cap is 1,130 billion US dollars, whereas the market cap of Germany as a whole is 1,188 billion. Starbucks is considerably bigger than the whole of the Irish stock market. Amazon and Google combined outweigh France, etc., etc. So you get the picture. Massive growth for US equities in terms of performance and market cap over the last decade. European markets, with the exception of the UK, appear to have been left behind somewhat. Okay, it's risk warning time. Please do take the time to read this risk warning thoroughly, because trading CFDs and foreign exchange on margin can be a risky business. If you're not sure about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative, who'll be happy to take you through those. And as I say, do take the time to read this risk warning thoroughly. Thank you very much for your time today.